House passing the stop funding measure, the bill, stop gap bill. Does this get us any closer to a stimulus package now that they have this kind of out of the way, or are we still just sort of seeing them drag their heels on this one?
Yeah, thanks for having me on, Ben. I think it provides a brief relief. I mean, stopgap, I think, is the perfect word. And I think I don't even know what the right word is for it. Unfortunately, or paradoxically, perversely, I don't know. The death of Ruth Bader Ginsburg last week,
also, yeah,
to me has injected a new level of partisanship over this stimulus package, and to me, all else equal, heightens the risk of some sort of delay. Now, I ultimately think they'll get something done, but I think that her passing has increased the risk of perhaps some sort of politically caused air pocket for at least a brief time in some risk assets, as it makes it a little harder to get something done.
Yeah, okay, so potentially a continuation of what we have been seeing. And let's talk a little bit about, well, speaking of continuation of what we have been seeing, Powell was speaking this morning. I guess first question is, was anything that stood out yesterday? It didn't seem like he provided many surprises. I don't think anyone really expected him to, but in terms of his comments, what raised eyebrows for you?
Just to me, I guess the one thing it was how he again talked about in the remarks about basically mentioning that they are willing to do what they need to do in terms of small business, basically going direct if they have to, and that they stand ready, as you noted earlier, to do what they have to do. Because to me, that's really the $64,000 question for markets at this point. Is I think the Fed's been pretty clear that they will do what they have to do to make markets function, and it seems like what they mean by make markets function is keep interest rates at politically expedient levels, no matter what the size of spending is that comes from Congress and from the fiscal side. And so far, what we've seen from the fiscal side is after the initial spike has been left wanting, and so I think there's not a whole lot he said that surprised me. I think he once again threw it on to the fiscal side's lap, and now we wait for them.
Let's talk a little bit about how, well, I guess in many ways, as you were saying, he didn't necessarily say by any means necessary, but he had the look in his eye, it seemed like. Let's talk a little bit about Fed and some of the contradictory comments we've been hearing. It sounded like Bostic didn't really think that there was more need for stimulus. I guess with all the regional speakers coming out, with Fed Chair Jerome Powell speaking, I mean, you have the potential here to create a little bit of, with all the transparency, to remove some of the clarity potentially here as we hear from different opinions and different thoughts from these individual speakers.
Yeah, I saw those headlines yesterday. I think it was Bullard who was effectively contradicting completely the outcome of their year-long policy review that they made a big splash with a couple of weeks ago, and did as much as they could to signify that it was a big deal. And I don't really know where he's coming from. I don't understand what his game was there, or what his point was. It doesn't really make sense to me, to be blunt. And I think the Fed's cornered. I think they're going to have to do whatever it takes, basically, and it really, at this point, it falls back to the fiscal side.
Yeah, well, you were talking about that a minute ago. All the fiscal side for one, all the spending from Congress, and we've got to pay for that somehow. That's got to be funded. We've been seeing a lot of auctions this week: the 2-year, the 5-year, the 7-year. What are we seeing in terms of demand for U.S. debt right now, as far as investor demand?
It's been good. You had a couple sloppy auctions a couple weeks ago. 10-year auction in particular was surprisingly sloppy, and that was right around the time of a little bit of the biggest indigestion in the markets prior to Monday. But again, to me, the wild card in that is it's good as long as the Fed's buying whatever it is, $80 billion a month. And the other thing that continues to, in my view, be underplayed is this supplementary leverage ratio regulation change that the Fed passed back in April, where it exempted treasuries from the calculation for bank SLR. So it basically means banks can buy nearly infinite amounts of treasuries and they don't have to hold capital against it. And so in recent months, there has been a growing amount of concern that the level of Treasury supply has breached above the level of Fed buying, and that could crowd out the private sector and drive some of what we saw in late 18 and then again mid and third quarter last year. And that's very possible. The wild card in that is that if you take a look at the Treasury buying from the U.S. banking system, it's been pretty impressive. In June, on an annualized basis, if you look at the Fed's H.8 report, U.S. bank holdings of treasuries and agencies rose at a 48% annual rate. In July, they rose at a 39% annual rate. And then the August latest data just came out on Friday, rose again at a 24% annual rate. So you've got the U.S. banking system that is buying treasuries. I believe it's around a $500–600 billion annual rate at that 24% mark, based on the baseline level of growth. And so it really is, you're watching the Fed do what they're doing, and then you watch the banking system do what it's doing, which is effectively QE, unlimited QE as proxy of the Fed. And so far, when you add those two into the private sector and foreign buying that exists, it's been sufficient. Demand's been good. So what would it be without the Fed, without the U.S. banking system? It's a bit of a counterfactual argument. It's hard to argue.
Yeah. How about the Fed's balance sheet? Because we had been talking about how it had been shrinking for a number of weeks while the EU was actually expanding their balance sheet. What have we been seeing there recently?
It's been over the last, several weeks, flat on net. It was shrinking for a bit. Some of that was swap lines coming down. Okay. It's grown modestly off the lows. So if you look at it, it's the big spike we saw earlier this year. It's backed off a bit from the peak of that spike and pulled back a bit and is now starting to trend higher again, although it's not reached prior highs yet. So we'll see what it does in coming weeks. I think all else equal, you should move to new highs in coming weeks, given that the Fed is still buying the Treasury and mortgage backs that they've talked about, and that the decline in the swap lines is no longer netting against that.
Luke, where do you stand on this dollar move right now? It's starting to attract some attention. It's getting bid up quite a bit, testing key levels of resistance right now, the 94 level, testing levels they haven't seen since the end of July.
Yeah, I think it's important to watch, and I think it probably will continue as long as the fiscal side doesn't do basically enough. And by that I mean, the longer we go without a stimulus package,
stronger the dollar.
The stronger the dollar will get. Yeah, and I think there's other things that could drive it higher as well. If we get a relatively uneventful election, like we have all the other elections in the past 250 odd years history of the United States, or nearly 250-year history of the United States, I think the dollar could get stronger on that too. So I think in the meantime, positioning on the dollar is still pretty negative. So I think it could continue for a bit, but I think ultimately it's self-limiting, because once it passes some critical threshold, it just starts to break the world and U.S. markets, and then we sort of wash, rinse, repeat right back to where we were in the middle of March, and the Fed's got to do something much more aggressive.